following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as ye old Options Insider Radio Network, upon which many of you are listening to this show right now. And, you know, listeners, usually we take some time out in the beginning of the show. We have a nice little cordial chat with my fellow members of the Option Block All-Star panel. But we're going to forego that today because today is a momentous day. And in some ways a sad day. And in some ways perhaps a happy day. A commencement, an ending, and a commencement all at once, listeners. And so I think with that, I'll just do a quick introduction. Andrew, Mike, Sean, all joining me on the All-Star panel today. But we just have too much to get to and too much momentous stuff to discuss. So we're going to dive right into the trading block.
The trading block.
And listeners, before the show started, I scrambled frantically to try to find a funeral dirge or some sound effect that could convey the sadness, indeed the import of the moment that we are about to collectively experience. And I couldn't really find anything funeral dirgy. It's also a little bit shocking and perhaps terrifying as well. So I found this. Perhaps this will do in cover your ears if you have delicate eardrums. That's our sound effect for the show. But it is indeed a momentous trading block. Listeners, if you've been listening to the show for any length of time, particularly those of you who've been with us from the beginning, all 2 years now of the Option Block, you know we have one panelist here who has devoutly discussed one particular holding time and again for the bulk of that 2-year period. And that panelist is one Uncle Mike Tusaw. And today, there's been a development with that holding that is perhaps shocking to some, sad to others, and perhaps others will say finally. But whatever your opinion on this, it is indeed a momentous day. Uncle Mike Tusaw, would you like to share with our listening audience out there today exactly what has gone on with your holdings? Perhaps your one key holding, sir.
Oh, I'm sorry, I didn't hear you. I was buying some shares of Apple in the aftermarket.
Oh
no,
okay.
Just kidding. Yeah, it's a momentous day for me. I don't know what I'm going to do anymore. And the accounts with which I manage, I no longer hold Apple. I mean, I still have some clients that are in it. Just they want I still have one account that's in it right now, but it's not. It's kind of just one person wants to stay in it for a little while. I don't think it's one of those things to where he's being greedy the right way, if that makes sense. But my official position on Apple is we are flat.
Out of Apple. You heard it here first, listeners. The the man who has been a stalwart holder of Apple through thick and thin.
I don't believe it.
Mostly thick. There hasn't been too much thin on Apple over the past 2 years. But yeah, just a momentous day, Uncle Mike. Can you tell us what led you to this monumental decision?
Bottom line, I'm not going to be that guy. Who is that guy? That guy is the guy that told people to buy tech stocks in the late 90s, thought they would never come down. That guy is the guy that said real estate was never going to come down. That guy, there's that guy in a lot of areas. And I've come to a decision. Ideally I wanted to get out up around the 700 level, but I really couldn't because I had too much short premium on the table when it did get that high. So came down, and we're going into earnings, and I hope for the people that are still long Apple right now, I hope for their benefit that it goes up to 800 a day, and I wouldn't exactly shed a tear because Apple's been a once in a lifetime at least opportunity for what we've done with it, and we're excited about it, and just maybe we'll buy in again once it goes down to 500. If so, who knows? But it's one that you never know what's going to happen. And it's the bottom line is if you ride something all the way up and ride something all the way back down, I don't want to put people on a ride that's only fun half the time.
So was it the Mini earlier this week that pushed you over the edge, or was it earlier, or was it after that? When did you come to this momentous decision?
It was last week, and basically, I like I said, I wanted to get out up in the higher sixes, but I just had too much short premium on the table to where it really didn't make too much of a. I had to kind of stay in it, but it was just the fact that I've been saying 700 for a while now, and I didn't quite get out as high as I wanted to, but by all means, it's been one heck of a run.
Yeah, there's certainly no room to complain there on the Apple side. It has been pretty much a nonstop roller coaster to the top for the most part, with a little bit of vacillation there and hesitancy over the past month or so. But for the most part, it's been quite the ride. I don't think you could really complain about not getting out of the absolute top. Of course, who knows what the absolute top is, what's going on. Of course, right now, as we're talking, listeners, there are a couple of big earnings being released into the marketplace live as you're listening to the show, or perhaps not as you're listening to it, but as we're recording it. And first off, we have Amazon. Looks like they're taking quite a walloping in the after hours. They closed today at 222, nearly 223, trading 211, down 11 handles. They were down more than that. They were down about 14 or 15 at one point right after the news came out. So Amazon taking it on the chin in their earnings. And then Apple looks like they might be fearing the opposite, at least. It looks like the number may have just come out, and the stock closed 609.5 roughly today, trading up about $2 in the after hours. So certainly not the momentous swing that we've seen in the past, but of course, the number is young. Who knows what it could materialize into, but still, and just slightly up on the day. Looks like, Uncle Mike, maybe you're right. Maybe the momentum is out of this one, and perhaps it is time to wash your hands of it. Andrew, Sean, what do you guys think of this momentous decision to wash Uncle Mike's hands of the fruit company?
I'm shocked. I'm still shocked. But I think one thing I'll agree with Uncle Mike on, they're kind of they're due for a new product. I mean, I don't really call the Mini a new product. So, they kind of remade music, they remade the telephone, they created the tablet business. No doubt that they will be generating sales for years to come. But as far as, what's the next big push for them to become like an $800 stock? Now, I realize that Apple trades, 12 times earnings, trailing earnings with just fantastic iPhone sales. But, they still, when you get that big, you need to have some big hits. And they just haven't had, obviously, since Steve Jobs died, they haven't had them. They're not remaking any industries anytime soon unless they come out of nowhere. So,
Sean, what say you on the Apple front, Sean?
That's what I see.
I've been talking to a few different clients today, and we hit that 705 and some change high. It was only 5 weeks ago, and we're down 14% in 5 weeks, which is a pretty big drop for Apple. So we're down roughly 100 points, give or take a few bucks, in 5 weeks. a lot of clients may be thinking, I'm happy with 700, or I'm happy with 650, or as Mike's saying, I'm happy at getting out at 600, depending upon when you get in.
620. Oh, 620.
All right, we'll make it 620. But at what the Lobster mentioned, I mean, not only, they need to come up with a lot of products, but not like that all their products have been copyrighted, but there's so much competition now that there's very similar products to theirs. Some believe they're even better than the Google and the Microsoft, multiple similar products to what they have, that you have many more choices now than just going out there and buying an iPhone or an iPod or an iPad. You can go out and buy other products that are very similar, and I think that's diminishing in the flavor of continuing to buy Apple and rev the stock up.
It's funny. I've been playing a bit of a naysayer to Apple, that role on this show here over the past couple of years, partly for the joy of being the devil's advocate and partly out of conviction. But I could certainly see why people were holding it. The fundamentals were strong. There were other reasons to be a cheerleader for Apple, even though it was getting a wee bit top heavy and has been for quite a while, in my opinion. But I still, you saw new products coming out, people flocking to buy them, regardless of what the pundits or others might say about them. iPhone 4S was pretty much a shrug from most of the technology people, yet the public devoured it. iPhone 5, same thing. People are buying it. So I could see a clear reason for that being a successful thing and driving Apple going forward. It wasn't until really the last, not the most recent one, but the last announcement about September. They're coming out with announcements every month now, it seems. I started to starting to see the chink in their armor when they announced the $300 iPod Touch. And I said to myself, $300 iPod Touch? They're supposed to be announcing a mini iPad coming out relatively soon, and that's the price point that's supposed to be for that. So who's going to buy this mini iPad, or who's going to buy this mini iPod Touch if you can buy a mini iPad for around the same price? And then how are they going to price this new mini iPad if indeed it comes out, because it's supposed to be competing with these $200 devices that are relatively, from a hardware perspective, relatively impressive. And sure enough, they come out with this mini yesterday or 2 days ago, and this is really the first time I think I can remember recently really scratching my head at an Apple announcement of saying, really, why are they doing this? I mean, the product is $330, which is a ridiculous price point. The whole reason to come out with this kind of thing was to compete with these 7-inch tablets that are starting to really get a lot of traction in the marketplace. And so if you want to do that, you want to at least be $299. It's only $30 less, but it's a very significant psychological price point. And also, they're premium pricing a product that really is not premium. It's in many ways, and pretty much always, almost substandard to the $200 Amazon Kindle HD or even the Nexus 7 that I know John Grigas loves and holds so dear. They have higher res screens. They have better, pretty much everything else better across the board. So it's the first time where I can really see them trying to price a premium on something that really doesn't appear to merit it. And so that appears to be the case with the street as well. Of course, right now, Apple kind of holding flat up about $1.50, which for them, post-earnings, is relatively meager. They've been off to the races. I can't
believe they reported.
Yeah.
There's no way.
I don't think they're out yet.
Yeah,
they're not out yet.
That could not be. That could possibly not be. I mean, they've been vacillating around a little bit. I will say that if this holds true, Andrew, your cohort, Mark, came on the VolView show earlier this morning, and he went out on a limb. It actually surprised me, and counseled people to load up on the weekly straddle with 2 days to go here, 1 day to go here, trading $30. So hopefully for his sake, this is not the announcement.
Actually, I have CNBC on, and they haven't mentioned Apple once yet.
No. There's just no way. There's no way the stock doesn't move at least 25 bucks. Sorry.
Says the man long the weekly straddle, or should I say daily straddle, this one. But there's no way it doesn't move. It moves a dollar. But yes, I guess this is just the pre-earnings love drifting it up higher, 3 handles, in which case that could be a good sign for Apple that they're going to knock it out of the park again. But I kind of agree with you, Uncle Mike. And it looks like, judging from what we've seen over the past week, that bearish risk reversal / collar that we outlined a week or two ago, the 600/6.5 for a $2 credit you could put on at that point, was really the trade to do if you were an underlying holder and really were worried about Apple. It was a decent way to hedge yourself and actually collect some premium. So hopefully some of our listeners put that on, or indeed just followed Uncle Mike's example and got out at a higher price level if they were concerned about that. So interesting stuff. Any ideas, Uncle Mike, what the new thing is going to be? Is it going to be Dollar General? Is it going to be, I know you like XLF. What's the new hot thing in the KYO land?
Well, I got, Apple wasn't 95% of all of our holdings. It was just a fun thing to talk about.
93%.
Yeah, 93, 92
well,
and a
it
half.
started like at 5%, and then after the capital appreciation, it became 90.
Yeah, no kidding. No, we have a lot of things that we're looking at today. If we have time to do a strategy block today, I did a ratio put spread on Chevron that I'll talk about if we have time for that. But just in general, it's just going to be we're just going to keep it mixed like it has been. I like FXI. We're going to expand our holdings in that most likely. Just a lot of littles basically.
Ford, baby. That's what's going to be. It's going to be lighting up your tape going forward. The Ford block.
And the other thing that I'm going to give some consideration to is selling puts on Apple. Like if we have a drop to like the 560 level or something like that over the course of the next week or two, yeah, why not? That's what I'm giving serious thought to doing. So a lot of things.
$150, it's a cash.
There you go.
So
a lot of things. It is just one of many holdings that we have.
Yeah, Andrew, as the diehard fundamentalist in the group here, and I mean that in the most positive sense of that word, where does Apple's $100 billion or so in cash, what does that translate to in share price? How low do they get before they're hitting cash?
$600 billion market cap company, right? And $100 billion in cash, so that's the $100 level. So, I mean, you get down to $400, you're selling 400 puts.
You got $100 of intrinsic value in there.
Well, yeah. I mean, the company still does make some money.
It's not a bad company by any means. Just
right.
Well, it's certainly no Zynga, which has been lighting up the tape of lately, taking it on the chin yet again.
Actually traded $2.13. Those junky little puts doubled in value.
Did you get into a cheap put spread or cheap puts in Zynga?
No, I didn't do anything. I just watched it. I watched it go down and just the name. It's a Roach Motel. So I usually when I've called something a Roach Motel, I don't do anything, even though I think that's what's going to happen. And then put values did go up. It did get ugly again, but now it's going to sit here forever and do nothing. So.
Of course. So aside from the fruit company and indeed we haven't really talked about Amazon. Amazon's still taking it a bit on the chin. It looks like a little bit has eased up a bit. Actually, has eased up substantially. It's only down about $4 now in the after hours. So up 10 handles from where it was trading just a few minutes ago. Perhaps this one will end solid on the day as well. Who knows? We've seen crazier things. This is an interesting one to watch. Amazon obviously doing a lot of interesting things on the hardware side, on the services side, on the web side. A lot of interesting developments, no longer just the typical online retailer of everything, but an interesting name as well. One I've been very interested in for quite a while as well. I didn't put anything on going into earnings. I'm assuming, Sean, that the bulk of your calls today were Apple related. Anybody diving into Amazon as well?
I had a lot of Apple conversations, not so much actual trades. Compared in the past, I'd have a lot of clients loading up either on the put side, call side, doing some sort of spread, some sort of straddle. There was a lot of uncertainties on my client base side going into these earnings that many of them are just waiting for tomorrow to trade into the news, not before the news. And I don't think we're out yet still. But whether it's positive or negative, majority of my clients just did not want to stick their head out there and see what was going to happen. They wanted to trade after Apple. I did have some Amazon, similar with Amazon. I think Google scared some of the client base here in the tech world, even though they did release midday, which was a little odd, but because of the slip release. But my Apple, Amazon trades weren't there today, a couple here and there, but it was more, just conversations of, I think I'm going to wait, see what the earnings are, and maybe trade the news tomorrow morning. I expect in the first hour tomorrow to get a lot of Apple and Amazon trades, both on the bullish and bear side.
So people today were just taking advantage of the psychologist aspect of your job, just calling up the chat, share their pain, their collective pain about Apple with you. They should give you guys some psychological training over there, some psychiatrist, so you can offer some mental health advice to some of these people who are calling you up on a regular basis to chat about their holdings.
Yeah, I just got a thing in the mail actually. I have an IRA at Schwab, and now they want me to be an Option Express customer. So I'm going to go call Sean and start to berate him 9 hours a day on the desk.
You see, Amazon. Amazon's about $11 off its low in the after hours. Coming back here.
Yeah, so the love for Amazon is getting strong.
They'll talk it up. They will find an excuse for that 39-cent loss or that 16-cent loss or whatever, and strike it all of out. It's because we just keep buying more servers.
That's it, huh? We just keep buying more servers.
We're just going to buy more. We're buying so much stuff to grow, and we're going to stop doing this eventually. I'm just waiting for them to do a secondary and sell 100 million shares of stock here at this level.
I will say my favorite earnings story was when I was still trading Intel, and the earnings came out, and it's usually that period of flux right after the earnings anyway. And I had some crazy flyer bid working in the stock for a gamma hedge, I don't know, 10 handles at least away from where it closed. And the earnings come out, and they were good, but for whatever reason, the earnings were misconstrued or the number was put out wrong or something like that. The stock gapped down about 12 handles right away. So I'm sitting there, the whole crowd sitting there, we're watching this number, and all of a sudden I heard from my stock guy, "You're filled." I looked at him, I said, I thought he was meant like something I hedge I had nearer to the money. He said, "No, this one, that's way the hell out there." And everyone looked at me like, what the hell just happened? And then the stock immediately turns off to the races and gallops up, like 25 handles the other direction. And it was completely erroneous, completely the wrong move in the stock. I'd never seen anything like that before. I didn't mind it. I didn't have to have it busted, so it wasn't bad. But everyone looked at me like I had done some sort of crazy voodoo. And it was just a weird hanging order that I had forgotten about that apparently worked out that day.
That's a good lesson for anybody that's long premium.
Yeah.
You're long premium in a stock, you should have some orders in the aftermarket, because it's all a free-for-all there. Because there's no when's the last price. I don't know what the last price is. What's the last price? I mean, some ding-dong could send in a market order and you're filled. It does happen.
And I sat there waiting for the inevitable bust to come in, and it never did. So it was one of those odd things that just sometimes you get that gift horse and you just take it and ride away. Anything else catching you guys' eyes here in the after hours or in today's trading aside from the big A's of Apple and Amazon?
How about the turnaround of the market this morning? Good. The market can't stand good news as long as Apple is waiting to report. That's my thesis.
Apple is just a beast unto itself. It's its own index. It's its own ecosystem.
I was telling clients this week, don't sell volatility until the day before Apple releases or tomorrow morning, because it ain't going down. And
what
sure
I like,
enough, how's it gone to, it kept trying to drift down this morning, and then notice the turnaround almost from the morning tick. It was the low point, and then everybody realized, Apple hasn't released yet. We got to buy it all back up again, which is exactly what happened.
Of course, there were some good earnings earlier this week. Facebook up about 4 handles from where it was trading on its lows. I know we were talking about on the last show, we're trading around high 18s, low 19s levels, and we were talking about various put spreads and things that looked pretty attractive to get in. If you put any of those on, if you put any of those on, those were short put spreads, obviously. That all worked fairly well. That was pretty aggressively bid up going into that earnings, and Facebook just turned it around impressively.
I had it to my IRA. I did.
Talk about talking it up. I think they tucked it up very well on that one. They said, we're really going to make something out of mobile. We're putting a lot of men on it. Our top men are on mobile. Bid up our stock. No material impact from there yet, but top men.
I haven't looked at Facebook on a computer in 6 months.
I don't think anyone has. That's the problem Twitter has. That's the problem Facebook, all these other services have, is they eventually become just a mobile client. And then at that point, what do you do? Even with a billion of anything is a lot, but at a certain point, you still have to, somehow incentivize and value and merit these valuations people are sticking on you. But apparently their promise of putting top men on mobile was enough to bounce the stock 4 handles, or about 20% off where they were trading at that point. So I guess ballyhoo to them. They've learned well from the Microsoft of old and the Apple of now to how to talk up your earnings. Speaking of which, I'm looking here at Apple. Still don't see it having budged much. Trading about, and my screens are of course now slow because everyone's pulling up quotes on Apple. Trading about 6.11 still, so up about $1.50. So I might have to hate to break it to you, Andrew, but I think that straddle ain't going anywhere. It's $1.50, and that's it. That's all you're getting out of Apple today. Wouldn't that be something? That would be the news story of the week, of the year, if Apple only moved $1.50 off earnings.
that actually would be more momentous than just about anything else.
I agree. I think that would be something in and of itself. If that was the way.
Apple earnings imminent. Any second now here.
Is that what CNBC has? Imminent?
Imminent. It has to be, because they always say imminent.
When they say imminent, he means it's about 20 minutes from now. So maybe
I want you to watch for 20 minutes.
Exactly.
I don't even know what their number is. What is it, like $8.50 or something like that?
I think 8.63. So yeah, right around.
The only number that matters is that ATM straddle. I don't even care what the analysts think.
Expedia had some really nice earnings in the after hours, up almost $5.
So there is some love out there.
You can make money.
See, exactly. And so I think with that, while we're waiting for the big A to announce, and Uncle Mike is uncharacteristically unconcerned. He's just watching from the sidelines. He's like, look at all these schmoes trading Apple. I'm going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block, and we'll, of course, keep an eye on Apple, so you guys, when you hear the number or see the number announced, just let me know. I'll just be pontificating away here about some of our unusual activity, and we're going to kick things off with, when you're thinking Apple, you obviously also think KLA Tencor, ticker symbol KLAC. They go hand in hand in just about every conversation I ever have about Apple. Of course, this is a maker of they design and manufacture and market process control and yield management solutions for semiconductors. So there you go, very, very sexy, very scintillating stuff. And looks like Apple numbers are coming out as we speak. So I will dive into this a little bit, and then we'll see. We'll pull it up before we even get into KLA Tencor. Let's see if we get any movement.
8.67 versus an 8.75 estimate, so they missed.
Uh-oh. Perhaps that straddle shall come into play after all.
I believe the stock is halted, however.
Yeah, it's halted.
My bids and ask are pulled.
Yeah, it's halted at like 611.15 or so. So yeah, closed around 609.5, trading about $1.50, $2 higher till it got halted. We'll see where it opens up now. Uncle Mike, do you miss this moment?
Not that they missed, I don't miss it.
You're like at 620 all day. Who wants some more?
Right now, I will say this, just to kind of pontificate my thoughts at this point. This would be a great time. I wish so bad that they had options in the aftermarket right now. Now, I know just with all the crazy prices that go on, it's really not going to happen anytime soon. But I would like, if Apple opens up at like 560 here in a minute or something like that, I would love to sell a 500 put. Yeah, if that were the, I
agree. I've been saying that forever. I know, Sean, you guys over at OX take a dim view of that, and I know I think Sebastian is not a big fan of that as well. But I think that would be fantastic. I think, you have to limit it obviously so that you couldn't let people go crazy. Maybe you only have people close open interest, something like that to start off with. Maybe you only limit it to names with earnings and strikes around the earnings at the money. Maybe Apple maybe go 100 handles each way. I don't know. But you find some way to limit it so you don't go crazy. But on the flip side, I think that you're missing out on opportunities and liquidity there that could otherwise be there. And I've heard the other sides of, we need to have market makers to do it right. And no, you don't. Just put up a simple RFQ or a simple order book, and just have it work that way. And then that in and of itself is more liquidity than there is now. So if you want to do something like that, people say, well, it would be a shell of an options market. All that is true. And yet at the same time, there is zero liquidity right now if you're an options trader. So any incremental increase, I think, is better. So
if we had it right now, I would have some type of a limit out there at the 500. If based on the stock being halted and Apple missing earnings, I would be putting in an order to sell the 500 puts right now.
Yeah, I would not hold that against you. And you might, who knows, like I said, with that stub order I got in Intel, you could get filled. You get some great fills here. Of course, you can get taken to the cleaners too, so there's that downside as well. I'm sure that would happen to someone, and they would call up Sean very upset that I got taken to the cleaners 50, 100 handles off the price I wanted to trade it or whatever. But, maybe you disallow, you obviously disallow market orders. Only limit orders.
I think the problem is, more of a clearing standpoint, not just Option Express, but all the clearing firms in the world. What if you have people dropping exercises at 7 p.m. at night, and you have people short, waking up wondering why they got assigned shares? Well, somebody decided to exercise an option at 6:30 p.m. I think that's where the issue lies.
Well, there is some of that. I agree, and obviously some care will have to be taken in implementing that. But of course, if you're trading these things and you're not aware that there is an after hours thing that could impact you, like we talked with the dividends on SPY a couple of weeks ago, if you're not aware of these things, then that's a risk to you. And so that's part of your due diligence of trading these things. I still come down on the end that at the end of the day, it's a net positive, regardless of all the problems, clearing, potential bad fills, lack of liquidity, blah, 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 blah. Right now, there's nothing. So I think, for you guys as a brokerage firm, there'd be more orders coming in. Instead of having people wait till the next morning, right now, if you're a long premium, and if you're a long premium trader as a retail customer, unless you go to guys like Option Pit and you have them teaching you or maybe executing how to scalp your gamma, and you have a sizable account so you can come in and scalp your gamma all day long and defend that long premium position, and then perhaps find some way to unwind it before earnings. But if you're the typical long premium option trader on the retail side, you're just buying some upside calls in Apple before the earnings, 9.9 times out of 10 that trade's going to blow up in your face. And if you had an after hours market where because you're missing that vacillation in the after hours, if you had an after hours market where it gaps up, then it gaps down, like we just saw in Amazon, there was a 10 handle range in a few minutes. You could come down, you can get your puts out, come on the other side, get your calls out. There's a lot of things you could do. And granted, I know there's a lot of debate over this issue, but I tend to fall down on, despite all of the negativity and all the bad things that could possibly happen, I still think it's beneficial. So yeah, while we're still waiting, Apple's still halted. We'll keep an eye on them. We'll look at here at KLA Tankor, ticker symbol KLAC. This one, like I said, manufactures and does yield management for semiconductors. It closed today, essentially unched at $47.14. This is the name that does about 3,000 contracts a day. They did pretty much about a little over 10,000 today, actually, so a sizable day for them. The bulk of it coming on upside call sales. We saw the Nove 48s blasted out 2,500 times for about 85 cents. And then, of course, this also was done tied to stock. So keep that in mind when you're looking at this one. Also, the Nove calls were part of another 3,000 block. There was a cancel and replace going up as well. So a lot of weird prints going up in KLA Tankor. But a moral of the story is that Nove 48s and some other upside calls were sold in a bunch tied to stock today. So an interesting trade here in KLAC. We don't really talk about this one at all on the odd block. So it's one to keep an eye out for. Of course, if you're selling calls and then you're buying stock, of course, that works out to shorting the put on that strike. So keep that in mind. Of course, that is then a bullish position, even though you are short the option. You want volatility to come off. You want the underlying to rally. So it is kind of the inverse of what you might expect when you first look at that trade, which is another reason why we wanted to highlight that one to bring up some tied orders. Yeah, it looks like Apple's still not out. They're still working their charm.
Man, that straddle's really ugly right now. It's still at 611. Wow.
Yeah, that straddle could be potentially horribly painful, or it could be. I don't. This is. I don't know. Uncle Mike, you've been watching Apple a lot more than I have over the past few years. I've been watching it, but can you ever recall another time where it stayed this close to the strike for this long? Post close?
Never.
That's why I was saying that straddle might be a pretty big black mark. There you go.
Option Pit's going to have a nice Christmas party this year, I have a feeling.
Hopefully.
20 million shares of Apple trading in the core hours. Do we pass that in the after hours once we resume trading today?
I'm kind of scratching my head on this one right now. This is really an odd one. Where they're obviously doing some hardcore spin over in Apple HQ, where the mini is the best thing since sliced bread. We're going to sell 8 bazillion of them. And yeah, this price of $329 isn't ridiculous. It actually makes a lot of sense, and here's why. So I'm sure the analysts are getting an earful of that right now as we speak. And meanwhile, we shall jump on to another one synonymous with Apple. When you think Apple, you think PACCAR. PACCAR, ticker symbol PCAR. This is a global technology company who makes, designs and manufactures light, medium, and heavy-duty commercial trucks. Again, synonymous with Apple. And this one closed today about 42 and the 3/4, up about 8% or so on the day. So it was a bit of a rallying day today. They came in line with their earnings, but they missed on revenues, and their guidance wasn't exactly too bullish, so the name has kind of been not as strong as you might think. But one trader looking today and thinking that is going to be the case going forward because he blasted out some D's 45 calls. This is the name that does about 2,500 contracts a day. They did 10,000 today, so a fairly busy day for them, including, like we said, selling about 2,500 or so of the D's 45 calls, hitting the bid for 45 cents. These are, of course, substantially off, about 7-8% off where it closed today. So this guy obviously not expecting good old PCAR to rally anytime soon. 30-day implieds, not surprisingly, also coming off quite a bit as well, down to about 24.5%, off 23% from their highs. I never like talking about percents in vol movements because it sounds so counterintuitive. It usually throws people off. But c'est la vie, 23% move in that implied vol level. These were traded at 22% vol, so he's not exactly getting a great vol level here on his sale. And looking here in the after hours, well, we're still waiting for Apple. Sean, looking like the initial results may not be too favorable.
Not looking good. We got the ETFs, the indicators, the Qs, the spiders, all down pretty heavily. I'm sure in anticipation of a sharp decline in Apple. How low? Shortly, we'll be finding out once the halt is released.
Well, I guess I picked
Are you predicting down 300? Is that Grigas? Boy, I'm going to be able to sell my VIX call spread out. That'll be pretty awesome. I was looking at best way to play Apple was buy the SPY straddle. This closed, what is it, about $1.12 for the at the money straddle in the SPY.
That little, really? Wow. There you go. Yeah. That's a huge winner.
Apple to resume trading at 4:50 Eastern time, so we got 9 minutes.
9 minutes. So we'll gab along. We'll dive into the old Express block, and we'll wait for the ultimate indicator to see if that straddle was indeed the buy of the century or perhaps the worst buy ever. All right, here we go.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. And I think the theme of the Express Block is going to be similar to the rest of the show. I'm just guessing you might be talking a little bit about Apple. Sean, what have you in store for the Express Block?
Well, the Express Block, we had a couple interesting trades today. Not the Apple trades that I was looking for, or the Amazons, like I was talking earlier. A lot of my clients were more looking forward to trade the news tomorrow morning. In the past, they were getting ahead of their earnings, but with the disappointment of Google and getting caught off guard by the upswing at Facebook, I think a few wanted to sit out these Apple and Amazon earnings. But I did have a few interesting trades. I'll beat up on Zynga in the end, but we're going to start off with sold a nice Russell credit spread today in November, 1,800 times. We sold a 750, 740 put spread for 62 cents. So with the RUT closing in the 815 range, I think that's not a bad trade. However, this Apple news coming out soon could change that around very shortly. But again, that was a Russell 1,800 timer. We sold the 750s, bought the 740 puts for 62 cent credit. So we had some GLD calls today. Like I said, a lot of clients believe we have support at 1,700. We've bounced off that level a few times. We did drop below it a few nights ago, but then easily popped back up to 1,715. I believe we're right above 1,700 right now. And check gold where it is right now. However, I did buy some 300 170 December calls today for 220. And also a few hours later, tacked on another 300 lot of the December 175 calls in the range of 1 to 103 a pop. So got some metal lovers back here in OX land.
Uncle Mike, what do you think of all that GLD love? I know that was one of your big holdings for a while. You on that train as well?
Oh yeah, what I've been doing with GLD, I've just been doing put spreads and short puts on it, and it's come down since it came down. I believe the high was like 172, 173, something like that, and I've just been rolling down the puts, and I'm short the 165 puts right now in GLD, and I'm short the 30.5s in SLV. I've just been rolling them down, kind of running from the market, so to speak. And so far, I'm still winning, but so long as we have to make it another couple of weeks and the puts might go in the money, but it's at a stage now to where I think I just let everything get put to me.
Back in the GLD game. I like it.
Never left the GLD game, but still, I shouldn't say never left. Always been in the game, left to the underlying for a while, but still in the game for sure.
Underlying, what's that? I don't know what you're talking about.
Yeah, I don't know. That's for wusses.
Go ahead, Sean.
Oh, yeah. And moving on to Zynga. Obviously, I used to call the Three Amigas Zynga, Groupon, and Facebook. I don't know if Facebook is out of that Three Amigo conversation yet. Yeah, they did have a nice $5 pop, but they have sold off $3 of that already in a matter of 2 days. So we were around $25 yesterday, and Facebook's all the way back down to $22.26. So this could be another sub $20 stock by the end of the week or early next week. So I'm not really sold on Facebook. But as far as trade-wise, my clients are not sold on the recent slightly upswing in Zynga. A couple large block sized on Zynga. We were buying the 500 of the Nove $2.50 puts for 22 cents. There was only about 3,000 all day long of those. So we did about 1/6 of the total volume on those $2.50 puts. Again, those are buying 500 of the Nove 250 puts. And
that's pretty aggressive for Zynga. That's pretty near term. Those are relatively meaty puts for Zynga.
Yeah, I guess some clients that are not sold on Zynga and continue to believe we will be going to the pink sheet land, not this year, but probably sometime next year. And also jumping into December, $2 puts buying 350 at 8 or 9 cents.
I like that trade.
Yeah, so I really didn't get the spreads that I have been getting in the past, besides the Russell I mentioned in the beginning. A lot of just single leg and metal trades, some Zynga, and I'll be looking forward to the Apple Amazon traders coming back to town tomorrow.
Yes, listeners, we're still keeping an eye on good old Apple. Has not resumed yet. So I think with that, we shall close out the old Express block and dive right into the good old Uncle Mike strategy block.
The strategy block.
All right, Uncle Mike, and we are just mere minutes away from Apple resuming. But in the meantime, sir, unleash your strategy upon us.
All right. I don't know if it's going to be hard to actually talk about a different stock when I know Apple's going to start trading in 2 minutes.
Welcome to the new way for you, the new world order for you, sir.
Yeah. I don't know if I can handle this, but anyway, I think Chevron is a good company for the long term. I like the fundamentals of the company. I like a lot of things about the company. Is it necessarily a stock that I would want to buy right now with earnings about a week away? Probably not, but it's one that I'd like to get into. So the first thought of how you get into stocks that maybe a lower level is maybe you could look to just sell a put and let the stock get put to you when it does come down. That's one thing that I've done on many, many occasions throughout life, but I was just on the phone with a client today, and what we decided to do with this was get into it, but have a little bit of an interesting tweak to it. What we looked at was just from a charting standpoint, short term, you could make a case that it has support maybe at 105, maybe it has support at 100, maybe even 95. You could make an argument for any of those levels as a possible time to get into it. So whenever we run into something like that, or whenever you run into something like that, I think that the strategy I'm about to propose is something that could make sense. What we did was we went out to January and we bought one 105 put and we sold holy cow, 585 for Apple.
Well, there we go. That straddle. Buy of the decade. 620 at 620. Who wants it?
You mocked me.
To be correct, I mock Sebastian, which I do frequently on this show.
Actually, it's early, but it could be much worse. It's only down about $20. I mean,
yeah, now it's back at 600.
Yeah, it won't take much.
Yes, Apple
Well,
vastly.
what I'm really more interested in is what happens with overall market. I don't know. I think that the market volatility spikes tomorrow, maybe in the morning fast, but then it spends the rest of the day tanking. That's my play of the day. But only down $15. It's not too bad, I guess.
No, it's not. Buy some more.
Surprisingly, there's only 8,000 open here on these AAPL weekly 600 puts. You would think that strike would be a pretty popular. Of course, 13,000 went up today. That could have been a lot of opening there. So that could be 20-odd thousand. You think there'll be a lot of people flocking into that, such a key psychological level.
It's that run from 700 to 600. Tusa was right. It's just another company now. He was right.
I think the mini just puts that nail out there. I think even Apple diehards are starting to say, "What the heck is this? And why is it priced this way? And what is it supposed to do?" Interesting stuff.
It's like that guy Gautier singing, I'm just somebody that I used to know.
It's even got Andrew singing. That's a scary.
I know. It's when the Lobster's singing. It's very sad, but. It's still a company that's going to earn $40 a share a year, 13 times. It's not, it's not that awesome stock that would just go up and up and up and up.
Maybe they're doomed to Microsoft land for the next 10 years, making a ton of money, but the stock goes nowhere.
Yep, they should have never declared that dividend. It was the kiss of death.
Same thing with Microsoft. That was the beginning of the end for them. And now the same thing with Apple. That was it. And then now, of course, the mini. I'm still waiting for the Apple washing machine to really kickstome the company again. That's what's going to do it, I think.
The iMachine.
They need to bring their design to washing. Anyway, Uncle Mike, while we're digesting this, give us the rest of your Chevron discussion here.
Okay, so what we did was we went out to January, we bought one 105 put, and we sold two 100 puts. And so by doing this, and we ended up getting a credit of about maybe 20 cents, something along those lines. And so what this does is it opens the door for buying it if it comes down a little bit. Let's say Chevron goes to the moon, or once it goes up to like 115, 116, we'd probably be able to get out of this at maybe a profit of a nickel or two, something like that, or nickel or a dime, something like that, and just move on to another trade. Because of the fact it didn't do what we wanted it to do, but because of the fact that we got a little bit of a credit for it, we were able to do it. But what we're ultimately looking for with Chevron is that once it comes down to the 105 level, or this is what we're projecting it to come down to, that's when we go to work. At that point in time, we can do a lot of things with it. We can sell the bear put spread for a profit and perhaps just hold on to the 100 short put. Or some other things with which we could do. Let's say it comes down to that level. We sell the bear put spread for a profit. Because of the fact that Chevron does pay a little bit of a dividend, calls are going to be priced a little bit less than puts on it. So at that stage, we could set up some type of a low-priced combo to where maybe we're out in January with a short put. Maybe we can buy perhaps a March bull call spread at the 105, 115 level or 110, 115 level. And then if the stock goes up a little bit, we get out of the put and then perhaps create a free bull put spread. Now, does it always work this way? No. But by setting yourself up as a ratio spread as a way of getting into the stock, it's kind of an alternative of just selling a put to get into the stock. And it gives you some choices if you're willing to maintain the position and, as a wise man once said, do stuff.
A very wise man indeed. I'm looking here at this chart while you're talking about Chevron. This vol, it spiked up a little bit over the past few weeks, but it's still relatively. This pronounced rally is really, you can see it in the vol. The vol is just nothing out here. It really is a low premium name right now. So perhaps a good time to start legging into some of those put spreads. Not a great time to start shorting them, I guess, but it depends on how you want to set it up.
He buys a little gamma. Buys a little gamma. Tusa always trying to help his clients make money. What kind of a money management manager are you? Jeez Louise.
Well,
He actually works. The BBI is going to be really high on that one, though.
Yeah, it is. But
you might be closing one spread. Oh God, you're going to be doing all kinds of stuff.
Ah, crap. Well, I got to do something. I don't have to look at Apple anymore. So what the heck am I going to do with myself?
I think whittling I hear is a great hobby. Maybe you should take up that, or maybe knitting. Those are also good things. Keep your hands busy while you're watching Chevron, waiting for that vol to come in even more.
Everybody's going to buy
I'm
gold.
so glad Sebastian's not on the show right now after that remark.
I was setting it up for somebody, but no one knocked it down. No one took it to that base level, which I suppose is a good thing. All right, thank you for that, Uncle Mike. And now we shall close out the strategy block and dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we talk about what's coming up for the rest of the session and for the rest of the week into the weekend, and we'll give you a final rundown here on Apple. And I take that back, that comment from earlier, Andrew. It looks like that straddle might be a piece of garbage. Apple rallying back up, trading about 604 right now, so only off about 5 handles. So that $30 daily straddle, unless you worked some magic in the after hours scalping, you may be hurting. This is one of those times, and maybe you wanted a little after hours love on the option side to be able to get out of some of that.
He bought it at 586.
Yeah, stock trade like 586.
There you go. Exactly. That was his scoop. He turned it around with that impressively timed gamma scalp. So yeah, Apple hovering around 605 now. Perhaps they'll even open. They haven't stopped spinning over there in Cupertino. They're still talking. They're still selling the mini, so the stock is rallying every second of the spin. We also have Amazon here, and let's get a final number here for Amazon. Amazon also essentially unched now. So all this dire talk we had earlier about maybe Dow opening up massively down, S&P tomorrow, perhaps that shan't be the case. We have Amazon essentially unched after being down, 18 handles at one point in the after hours. It just goes to show how much pure vol there is in the after hours in that initial period of flux. So a lot of interesting stuff to watch. We'll of course all be watching Apple and the fallout tomorrow, because where Apple goes, there goes the market as well. And even if this is a meh earnings announcement, that in and of itself is a substantial development for this name that has been so synonymous with just almost cult-like level of devotion, to the point where it's really one of the few equities that exhibits almost a commodity level of skew around earnings, where there have been periods where the calls have been bid up over the puts in Apple, which is insanity. But that's just, you only really get that with Apple and a couple others. So that alone is worthy of discussion and analysis, and an interesting one to watch. But Uncle Mike is done with it, so I guess we're not going to talk about it anymore on the show anymore. No more Apple, right, Uncle Mike?
Heck, I want to buy it now. Buying opportunity.
Yes, 605.
No, he's 500.
Scalp 15 points. Why not, right?
There you go.
Just 500 puts.
Call all your clients back. It's 605. We love it.
We're back in it.
We hated it at 620.
I'll bet you the D's 500 puts are trading for will be trading for $3 tomorrow. Let's see where those things close.
Spoken like the true former DPM
Apple
that
at
you are.
607.
Yeah, it's almost unched.
Obviously, there's been many times after our earnings, and what happens the next day can be two different stories. However, if this holds up to where this stock is basically unched tomorrow, I can't remember any. Actually, Apple is now positive. This is going to be the lowest percentage swing on an Apple earnings play in many, many years.
Okay, if you're scoring at home, the Apple D's 500 puts close $4 bid. Close $4 bid today.
There you go. You think they'll open up $3 bid tomorrow? Perhaps.
That's what it feels like. Oh yeah. Well, let's see. The volatility is 42 on it. Now they're 38. Yeah, they could definitely open up down $1.
Oh yeah, I would be surprised if it was that little. But yeah, of course the zealots are still out there. They're still there, and of course the naysayers are out there floating around the D's 500 level apparently.
Well, now it can safely run to 700 because
Hit the straddle on the other side now.
Well,
yeah.
Like the stock's in the same place it was, 6 months ago, right? I mean, did it trade $600 6 months ago?
So yeah, less than 6 months ago I think it was, but it was trading substantially south of that, not too long ago. But of course, that'll be interesting to see, Uncle Mike, if it vacillates to the upside now, and you can get the other side of that scalp off at maybe 620 or around there, and then you're looking all right on that straddle. But if you're the best timed gamma scalper on the planet, but that would be maybe not hilarious is the word, but interesting if Apple opened up right around 609 tomorrow, just annihilated everyone who picked up any vol out there. That would be probably almost analogous, maybe not as bad, but it'd be analogous to the Netflix from 300 plummet that wiped out all those premium sellers. This will be the thing that wipes out all the premium buyers on Apple. And
if you're going to be wrong, you might as well be wrong.
Yeah, go big or go home, right? Our motto
That's
here.
right.
You get to wait till the end of the day.
What was that? Couldn't hear you through the yawn.
Sorry. You get to wait till the end of the day.
Yes, exactly. So aside from Apple and Amazon, Alan, I almost called you Alan. Andrew, what have you been watching the rest of the day? And what are you watching for the rest of the week?
Old technology like Microsoft, Yahoo, junky little put spreads in that. I think those companies are kind of at the, kind of at the bottom of their arc, and selling put spreads and stuff in there. They're, it's not like it's sexy, but it's hard for me to get sexy about this market. On the upside, it really is kind of it's hard to think of a reason why we're really going to rally back to the highs of the year. Besides the fact that everybody's, basically doesn't have any money in the market. That's why I think like selling out of the money put spreads, strategies like Mike just suggested, that's, it's kind of a market we're going to whip along. I'm not too worried about us, going to 1250 or something. So that's kind of it, just sort of drifting around. And to me, that's it. Sell the juice. And we have, a reasonable volatility now. The VIX at around 18 plus. I don't know how long it's going to stay there now that Apple has reported. So I think that's kind of, as far as strategy goes, that's what I am looking at.
If Apple opens up at 609 tomorrow, where does that VIX open up?
The Apple
15
opens at 609. Oh, the VIX opens at 15.5.
Just crushed completely.
It absolutely annihilated.
Again, Apple wiping out all premium buyers across the board.
It's funny. I've been telling. That was my closet thing this week. Guys, you don't have to sell volatility until 350 on Thursday, because it's not coming in until Apple reports. So I got a couple of clients to suck along on that idea, and actually they're probably happy with it now. So.
As long as they didn't listen to Sebastian saying buy that straddle, they're good. They're happy campers.
Who knows where Apple's going to open tomorrow?
Yeah, I mean, that's true. It could go anywhere.
605, there it goes.
Oh, back down. I hope you got your upside gamma scalp in at like 608.
There you go. You scalp $20.
There
604.
you go. You're printing money. You do this all day long. Nothing but money. Uncle Mike Tusa, what are you watching aside from your previous holding? What else is catching your eye these days?
Well, yeah, it's kind of like what Andrew's saying. I think right now is we're going to have a market to where setting up ratio spreads, and this is definitely, I think we're going to definitely have a trader's market for the next couple months. I would not necessarily, even though the VIX is at a higher level right now, I still think we have a lot of uncertainty going into, we got something going on November 6th. I forget some event, but anyway, I keep forgetting what it is. But going into that event, I don't know if I'd necessarily want to be shorting a ton of premium too close to the money. I'm not saying that we're going to have necessarily a run of the VIX up to 800 by any means, but I'd still rather be a buyer right now of premium overall.
And Andrew, I like your little comment about Microsoft too, because that's true. In all this furor over Apple and all this other stuff, people have forgotten Microsoft came out with their big tablets this past week. The pricing was announced. They started releasing them. They were quote unquote sold out. They could have only made 6. We don't know, but still, and that was completely washed away by this mini. We'll see if the mini is a debacle or not yet. Probably too soon to tell yet.
600 million Windows users. I mean,
yeah.
You can just take your little tablet home, and you can dick around on your tablet. You can do whatever you want. Everybody forgets how giant and Microsoft's revenues still grow 5% a year on very unsexy, mostly because they got to write stuff off. But what are you paying for that company? 8 times PE or some ridiculous? I mean, what is it? 6 years, Microsoft can buy back all their own stock on their free cash flow.
They're looking at 15 PE right here.
You want to sell put spreads and something? I just don't see a lot of downside in that.
Of course, they also have Windows 8 coming out now, which a lot of people are not too enthused about either. So that could be their version of the Apple Mini. Of course, Windows is a much bigger thing. So
I think it's a different. Actually, I've been messing around before. I started 3D technology and stuff for a couple of years trying to develop some trading products, and I think people naturally want to touch a screen if they can. They just go bink, bink, and they get what they want done. And I think people are underestimating, look at how fast the iPad and the iPhone took off. Why? Because you just what? Android. You just touch the screen and things happen. You can't. I think underestimating the fact that they could make some interesting technology changes. That could happen with a huge user base. It wouldn't be much for Microsoft to start to increase revenue again. So,
I agree. It's something they needed to do, which is maybe not this choice, but they need to do something bold and different than just push out the same old Windows. And the problem is, I think for me, they pushed out this kind of one size fits all thing. So it's great for touch and tablets, but they're also sticking that on my desktop with no very easy way to eliminate that UI, so I can just get back to the old Windows that I want. So maybe
just click it. You get two desktops. You just go.
It's not as easy. It takes a little bit more doing than that, and certainly a lot of things that you're used to doing. I don't think anyone. I don't know. Maybe I'm crazy, but I don't think a lot of people really want to touch their desktops. That's a weird scenario for a lot of people, or even maybe their laptops. But a tablet certainly makes a lot of sense. So maybe having, I think, a little bit more. Plus, they have these whole new Windows RT thing that's called Windows, but it's not, and all your old software won't run on it, and people are going to be buying that like your grandmother. Why won't my old Word run on this? And all kinds of fun stuff in store for them. So probably some turbulent times ahead for Microsoft as well. But still, interesting one. I was trading iron flies on them during earnings. They're a fun one to watch these days as well. Getting kind of buried in all the love of everything else out there. Sean, what is lighting up your personal tape? You still sticking to that Dow down 300 tomorrow?
You know what I find interesting? This week, we did not pay attention to Europe at all. There's been some news out in Europe. Draghi.
Thank God. Everyone's just done with Europe. We're all just done with Europe. The heck with it.
That's what I'm a little concerned about, is we get past these earnings. A lot of them have been disappointing. The market is down for the most part. Once the earnings pass, this European news could come out again and continue another sell-off. But that aside, at the next show, hop on Europe and Spain and Greece and beat up on them on a later day. However, tomorrow I'm looking forward to real GDP that comes out at 8:30, mainly because it's been a large topic I talked about during the debate, if anybody's watched the debate at all. So I'll be looking forward to tomorrow's GDP, and most importantly, next week, we got private jobs for the month of October on Wednesday, which is Halloween, followed by the non-farm payrolls, the big job numbers next Friday. As far as earnings, we do have a lot of great earnings. As far as what Andrew was mentioning, we got some old school names next week. We don't have the high flyers like Google, Apple, and the Amazons of the world, but we do have stocks like Archer Daniel Midland. We got Pfizer, U.S. Steel, AIG, Chesapeake Energy, ExxonMobil, Starbucks, and the two high-flying credit cards, MasterCard and Visa. So I think, again, another week full of pretty large traded stocks coming out with earnings. And, again, two major economic reports with the private job sectors and October numbers. So I'm looking forward to all that.
So Sean is bullish on the future here, at least from an earnings perspective. Lot to look at, and of course those are interesting ones for options trading as well. Not as sexy as some of the ones we covered this past week, but still, they're a little less on the $300 mover after earnings levels, so they won't wipe out so many of our listeners as some of the other ones we've been talking about. But that is going to do it. As before we close out the old around the block, we'll do one final glimpse here into the old fruit company and the old bookseller. Amazon trading about 218.5, so down about 3-4 handles in the after hours right now. And then Apple hovering around 601, so we're joking here behind the scenes on the show that it's just a gamma scalping dream, down to 585, up to 610 or so, 609, back down now 601. You can just scalp all day, and that straddle was the buy of the century. So a lot of interesting stuff going on here in the after hours. Well, sure, you'll be listening to this tomorrow morning.
You mocked us.
I love to mock. It's fun. But yes, you listen to this tomorrow mornings. You'll see how all of this shakes out. And it'll be interesting to watch how this opens. And, of course, if Apple opens relatively unch tomorrow, wait for the big vol crush to come in just across the board as pretty much the big index. We have the end of the week. We have the weekend. We have all the earnings done. Like Andrew said, everyone was holding their powder for Amazon and Apple tonight. So if they open near unch, this all is going to come out like a massive, massive balloon. So be aware of that, you long premium traders. All right, that's going to do it here for the Around the Block segment and also for this episode of the Option Block. Before we go, I want to check in with all my cohorts here on the Apple panel, a.k.a. the Option Block All-Star panel, and see what's coming up with them. Starting with you, Uncle Mike Tusaw. Who's next on the old webinar train?
Craig Severson from the Option Linebacker. Craig's been a guest on our show in the past. I think it was the day that I was guest hosting. I'm not sure if you were here or not, Mark, but we have had Craig on the show before, and he's scheduled to talk on Tuesday night. So we're excited. We'll have more information on the webinar on the Monday show.
Leave it to you to find someone who calls himself the Option Linebacker.
I hate
that.
It.
That is so up your alley. It probably couldn't possibly be more up your alley, sir.
Oh, I hate the title. I don't like defensive players. Come on now.
Oh, that's true. You were an offensive lineman.
Yeah.
You were used to the glory of the offensive line. You don't know anything about that.
Right.
Exactly.
So
that's great.
No,
the
Craig's
option linebacker. I don't know what that even means. Option linebacker. I just love the name. Does he tackle you if you trade options? How does that work? Does he carry your premium for you? Does he stop the premium train when it comes your way? How does it work?
You will see. Well, I'll bring him on Monday. We'll see what he has to say.
I'm looking forward to it now. All right, Andrew, what's coming up in the land of the pit?
A couple things. Of course, the big one is you get to listen to Mark talk all day about using volatility to improve directional trading, much along the lines of Mr. Tusaw, the option strategist, using options in an intelligent way to get what you want done without getting taken to the hoop. And we use, and then volatility is a lot big. Hopefully our guide there on how you structure the trades like Mike was talking about. So there is definitely, like anything, a way to do it. And Mark will be happy to teach you the option pit way there. That is November 10th. All day affair at the SIBO. You can go to our website, www.com, optionpit.com events, and sign up. And I believe also you get a deal on the November Gold course if you sign up now. If you sign up for the November Gold course, you can talk Mark. I think we have 1 or 2 slots open. Mark will, I think, throw in the directional trading course on the SIBO if you talk to him nice. And say nice things about him, about his TV appearances.
Yeah, and don't mention the straddles, and then you'll be all set.
Those straddles are for you to laugh, but a lot of them have paid. Pretty good.
I just love pulling the trigger on it. Yeah.
Also, we have a free webinar today, everybody, from guest speaker Fausto Pugliese of CTU, Cyber Trader University.
Next to option linebacker, that might be the second best name of the day on the show here.
Oh, I know. If it's that Italian, I got to say it. I'm Andrew Giovinazzi. I got to love that name. So it's a good time about just, setting up discipline in your trading, which we all always could have a little check-in on. So that's a free webinar today, 7 p.m. Eastern time. And that's what we got going on the Option Pit. I will be in Chicago with Mark. I think we'll have a day trading session or a mock trading session while I'm there. Somewhere between December 11th and 14th, which we'll announce. You'll get to meet us and actually start to think about how these option thingies work. So anyway.
And our listeners will listen to this tomorrow morning, so after the webinar, can they get a recorded version of that to listen to? Will it be archived on the Option Pit website?
Yes, all the stuff will be archived on the Option Pit website.
Great, so listeners, you can go there tomorrow and check out, what was the name? Fausto Pugliese. That's quite the name.
Fausto Pugliese today.
That's something from The Godfather. That's fantastic.
Exactly.
All right, and last up, but certainly not least, Sean, what's coming up in the land of OX?
Well, also on the 10th of November, but not at the CBOE, we have a workshop in Denver, Colorado. The 10th, I believe, is a Saturday. You can register for free. It's a free workshop. Former market maker Jim Roseanne will be revealing the power of the Options Express platform. We have 2 Power Pack sessions. Anyways, you can hit up, just go to optionsexpress.com if you're in that Denver area. It will be at the Denver Marriott Tech Center. Again, it's free. And besides that workshop, we have daily webinars. You do not have to be a client, but if you are, again, it's listed underneath the Education Center. All you current clients know where that is, but any clients that are, or potential clients, I should say, that are thinking about joining, all you need to do is go to optionsexpress.com. There's a huge education tab in the center. You do not have to open an account and to join all the webinars. Learn about the website first before you even open an account, and fund whenever you like and trade at a later day. We do have a lovely virtual trading room to practice all the tools first, and when you're ready to trade, fund at your own leisure. So we look forward to you. If you ever have any questions, feel free to call the trade desk. You could always ask for me, Sean. I'm the only Sean here.
That makes it easy to find him. And you find him anytime, day or night, listeners. 2 a.m. in the morning on his cell phone. He loves it. He's that committed to the cause. So find good old Sean Fitzgerald and put him to work for your account. And that is going to do it for this episode of the Option Block. We didn't have a chance to get to the old mailbag today. We'll get to it next week. Of course, a lot to chat about here on the show with everyone's favorite fruit company finally giving up the ghost, at least from Uncle Mike Tusaw's perspective. Of course, if you'd like to join us here on the show and post your questions or comments, then you can do so at theoptionsinsider.com. Just click on the comment section there and post whatever you like to say, questions, comments, perhaps not some profanity, but whatever you want to say, and we'll find it and pull it up for the show. You can also get us questions at theoptionsinsider.com or on Twitter at Options, or on Facebook. Just look for Options Insider. All of those are ways to get to us right here on the old Option Block. And of course, we want to thank all of you out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.